Hello, everyone. My name is Ria Cotton Landry, Second Vice President for the Women's Council of the National Association of Real Estate Brokers, welcoming you to the Professional Women in Real Estate series. This session is about CEO growth. And today we have with us Sheila Moody, who is a CEO that's going to help us talk about our financial responsibility. So each month we'll talk and have a different topic that we'll discuss. So be sure to like and subscribe and also comment in the comment section and let us know what you would like to hear more about. Welcome, Sheila, to our Professional Women in Real Estate series. So glad to have you as a realtist.
Thank you for having me.
Yes, so I just want to start off by just sharing with us your businesses and your background. So one thing that I thought was so amazing when speaking with you is that when we're in real estate, we don't know, and we're working together in the realtor spirit, we always don't know how many hats we wear in our businesses within our family, right? And so I was so amazed to hear about your ventures in real estate and beyond. So can you share with us your background as well as an overview of your businesses?
I'd love to. So my background is actually in technology. So before I even got into real estate, I worked as an IT manager and also did software engineering. I was with IBM. I worked at UC Davis Medical Center, and I did this for over 15, 20 years. And while I was working at UC Davis, I got my broker's license in real estate, and I did real estate on the side. And when I switched over to IBM is when I got laid off. And when I got laid off, they came to me and said, "We have a position in another department. Do you want to go to that department?" And I made a decision, and this is in 2012. I made a decision that year that I would do real estate full time. That yeah, I was going to make it work. I was going to make it happen. But I felt like I got that push, but I had also said, God just showed me if it's meant for me to do something else, give me a sign. And like a week later, I got laid off. I'm like, oh, no, no, not that sign.
Right,
Not that
right.
sign. But it was the best thing that could have happened to me. So that's pretty much how I got into doing real estate full time. But again, in the back of my mind, I always remember that I was laid off or things can change, industries can change. I was a part of the crash in 2009, 2010. And I had my real estate license at that time. Thank God I had something to fall back on. But as time went on, I just decided that, okay, I've mastered to some extent, right? I've mastered some of this stuff in real estate. I'm going to increase it and get my not my broker's mortgage license to do loans. And then I just remember like, you know what? It's okay to add on. So I know you talked about, wearing different hats and I'll wait for you to guide me. But for me, being an entrepreneur has always been something that I did naturally. Never thought about it, but I've never been comfortable with putting all my eggs in one basket. But in order for me to do it, I had to learn to run a business like a business.
Right. And I'm pretty sure that having going through that layoff in that transition definitely has impacted your thought process regarding having your eggs in one basket, right? And so we learn from experience how we want to operate and move forward. So I know that in addition to doing real estate, you've also expanded on logistics and incorporated your family into that, which I think is so amazing because I tried to convince all of my kids to get into real estate. Some of my family is already in real estate, but you just want everybody to kind of work together. But not everybody has the same goals or the same focus when it comes to entrepreneurship. So, can you tell us about how you pivoted and why you pivoted to additional businesses outside of the real estate scope, even though you had your real estate broker's license and mortgage, which is some variation right there? But what made you want to then expand further?
It was COVID. When COVID hit, I got scared. Like as soon as it came, the first thing, like that first month, I'm like, "Man, what if we can't show houses? What if, the in the mortgage industry, the guidelines were changing every week where, a loan that we could do one day and couldn't do the next day. And I really did get scared. And someone called me and they said, "Hey, here's an opportunity. And it's to run a logistics company, but you have to go through like a boot camp and you really need to learn." I said, "Let me look into it." When I started to look into it, I realized that I had an opportunity to not only grow and add on a second source of income or a third source of income, but what I also had an opportunity to do is make a difference in my community and offer jobs to people with W-2 income, with PTO pay, with vacation pay. And so when I looked at that, I thought, you know what? Let me see which members of my family, based on their strengths, who can be a part of this, people that I can trust that can help me run the business.
Nice, nice. And so how did they take to that? Were they excited? And when of course we know that they end up being a part of it. So how's it now?
It's actually great. I'm going to say this before I get into that piece of it, the logistics. When I was doing loans, I actually called my sister and I said, I need help with processing. Can you go get your certification or license to do processing? I need a processor. And then I hired my niece to help me with assisting with keeping things organized. One thing I learned from doing that at the beginning, so before I got them into logistics, I had them helping me with my real estate and loan business. And my business grew 5 times. I'm talking about the amount of money that I was making increased because I wasn't trying to do everything myself. And at that moment is when I realized that if you really want to grow, you can't be the person who answers every call. You can't, I just have this joke where I had a business line. And if you call the number, it said, you've reached, this company for human resources, dial 1, for payroll, dial 2, for technical support or customer service, dial 3. Regardless of which number you chose, you were going to get me. And that was my goal, was to change that. I wanted someone else on that other end. I wanted to train them and to set an expectation so that when people called and they down, extension 1, they were going to get someone who was geared to help them. That wasn't me. And when I made that switch is when everything went through the roof. And even when I got into logistics, that was one of the things that I kept saying from the beginning. I identified my family members that I know that are hardworking, that I could trust. And I started pulling them in and I said, I need to know, if you're serious, I want you to help me. And most of them are still with me today. Can I tell you a funny story? I had a family member that I had 2 that were not very serious about helping me. And they started like, oh yeah, I went to the yard to go check on the truck and everything's fine. I'm like, how did you go? And you were at home at this time. When did you go? And so I actually fired 2 of my family members early in the business because they weren't serious. And if you're gonna lie to me, you're actually, it's me that you're stealing from. So when I did that, everybody else said, okay, she's really serious. She's running this like a business. Either we deliver or we're out of here. So the family members that I still have working with me, and I say we're partners, even though I'm the CEO of the company, I could not run the business without them. And I trust them 100% to have my back and to make sure things are in order.
Great. Well, I know that in working with you on the NARAB Realtist capacity, you've also been one to keep budgets in line. And so this month's topic is on CEO financial literacy. So now that we know a little bit about who you are and that you are serious about your business, right? We want to talk about understanding numbers. And so we know that many entrepreneurs tend to avoid their P&L statements. And I wanted to know, how do you personally stay connected to your business numbers? And I personally get to know that you're very detail oriented, but I want you to share with the world.
You know, this is the area where I'm probably not, I haven't learned to let go. When it comes to the money, my hands are all over it. I don't trust anyone and I'd have to do better there. So I will be the first to admit that. However, every single month I am reconciling my books. I'm looking to see where my money is going, where I'm overspending, where I need to make adjustments, even from technology. So when I do my own P&L, I use QuickBooks to maintain all my records. So whether it's the logistics company or even my real estate and loan business, I am reconciling those books and I'm running my P&L and balance sheet so I can see what's happening. And if I need to make an adjustment, then I need to make it. So the one thing that I always remember is, again, run your business like a business. And I think about companies that I've worked for where they've had to do layoffs. There's a reason for it, because if the money starts to slow in coming in or your expenses increase, you need to make an adjustment in order to sustain the business or grow the business. So for me, I'm all over it. I do the financial records every single month. There are times when I may meet with my tax account in the middle of the year and say, hey, take a look at this. What do you think? This is where we are now. Am I going in the right direction? Do I have enough write-offs? And so those are things that are really important to me. Again, I can improve in that area, but I I'm learning. I'm learning to find. I just have to find someone at the end of the day
Well,
that I
so
can.
let's talk about what that means, right? So I'm assuming it sounds like you're probably looking at your P&L statement on a monthly basis. Yeah, okay. So I think what I'm hearing is when we talk about structure in our business operations, you have something personally that may have affected how you look at numbers. However, it sounds like a bookkeeper would be beneficial, right? To then at the point where we are able to let go, how beneficial is it or cost effective is it for us to have some level of bookkeeping? So I know some of our CPAs are certified, our tax accountants have bookkeeping services, but there's also independent bookkeeping services that can basically report out and report back to you as well. So I just want to say for the listeners that at this point, it would be good to inquire and I would say budget for at least a minimal type bookkeeping service, even if it's through QuickBooks, because you mentioned QuickBooks, and I know that they offer a bookkeeping service as like a sub-service. They have like subcontractors that come into your QuickBooks account, but that could be it. And so for business owners who are intimidated by their financial statement, what is your simplest advice to get started? Because I know that's me. I I am going to just admit it. I look at my real like P&L once a year. Like, I know things are operating in my mind when I'm going through my closings. I know what's closing. I know what my budget overhead is, and I'm balancing it in my head. But actually looking at it and saying, where am I? I look at once a year, and I have to change that, right? Because one thing we're talking about in financial literacy is that we work hard thinking like, oh, we're making money, we're profitable. But are we really profitable? And what does profitability look like? So what advice would you get to someone like me that's intimidated at looking at it on a monthly basis?
Used to be that way, and I think I used to wait until, like, the middle of the year or the end of the year, and then I would try to do my profit and loss for the whole year, and it was so much anxiety, so much stress because now I'm trying to remember things from months ago, and what I found is at the end of the month, like, when I do this spreadsheet where I'm like, "Okay, what bills do I have to pay?" And then I keep a spreadsheet, I look at what my balances are, and that's in my personal life. That same week that I'm doing that, I'm also working on my business. I would say think about the level of stress it's going to cause you by waiting. It gives me so much peace to know that I've already taken care of January, February, and I know what's going on. And to be able to do that, but I need to touch on one thing you said. You mentioned about the bookkeeper. The bookkeeper is so important. The reason I have a hard time is because I do bookkeeping and I done bookkeeping for other organizations, so I know what I want. However, if that's not an area of expertise for you, you need to hire your weaknesses, operate in your strengths. Do not try to do something that you're not built to do, period. Because it's going to take you 10 times longer to do it. So the amount of time that it's going to take you to do your P&L, it may take a bookkeeper an hour or two, it may take you days to complete it. So I would say just face your fears and do it if not every month, every quarter.
Mhm. Thanks. Thank you for that. So yeah, we have I think there's like some financial traumas going on that kind of we have to overcome. And we're going to talk about that in our CEO growth series too, is like how we have trauma that relates to how we operate our business. But can you share with us one financial lesson that you've learned in business that changed how you operate as a CEO today?
Yes. In 2017, I was audited by the IRS. And no, actually 2016 was the first time I got audited regarding my business income. And at the time I was listing it under Schedule C. So if anyone knows, if you're an entrepreneur and you have self-employment and it's not a corporation like an S Corp or a C Corp, your business income is listed on your 1040 under the Schedule C as income. And I had two separate businesses at the time. So the IRS saw two businesses. Under one, I may have had advertising as an expense, and the other one I had marketing. Well, they wanted to know, are you double dipping? Are you listing, the same item on both of your Schedule C? So they audited me. The audit went just fine. Something happened the next year and I got audited. I'm like, but here's what happened though. After the first audit, that's when I started keeping my books every month. I try to keep them every month. Sometimes I miss a month, so every 2 months, if I'm really busy. But when I got audited the second time, I was so organized. I walked into that IRS office. I sat down. I had a binder. I had everything printed out from my books. I mean, when I say I was prepared, and when I sat there and I presented to the IRS agent all of my documentation, she asked me two questions. After the second question, and she looked at the organization, she told me to get out of here. Like she said, I have to put a note in your file so that you're not audited again. And the thing about it was, at that moment, I knew that I can't stop doing what I'm doing because you don't want to get caught slipping. It's so much less stressful if you can just maintain your books and to know that your finances are where they need to be. And if you don't do it, then all of a sudden you have these surprises that don't feel good. So for me, it was that moment when I went through that audit, there was so much stress, but getting through it and winning, it really set the tone for me to stay organized no matter what I'm doing, being able to present. If I do get audited or someone has a question, they say, how much did you make last year? I know exactly. How much did you spend it on technology? I spent, 15,000 on it in technology, but I need to cut that back. I know where I need to cut or where I can extend my spending.
Mhm. And when we think about just the profit at our bottom line number, how do you set that goal? Do you set that goal off of, you know, expenses, like what your lifestyle is? Do you incorporate, investments? How did you gauge what you consider to be a profit for your business?
So the profit comes from just looking at the numbers, right? So once I'm putting in my sales and my income is coming in, and then I'm outlining my expenses, most accounting software will automatically say, okay, here's your either profit or your loss. However, when I'm budgeting, I'm looking at, like, sometimes we forget that we have something on auto pay. So we're
Mhm.
sitting here and, it's hitting our checking account or our credit card every month, and we're not even utilizing that service. So I do this quarterly thing where I look and see where the money is going out. Am I using that service? Am I using that technology that I'm paying for? Do I need it? And I start to cut back. Sometimes it's even like going to conferences. I know that conferences is for me, it's a way for me to invest back into myself so that I can grow. But is every conference necessary? If the conference, do I need to be VIP? Like sometimes I'm gonna pay for VIP just to pay for it. Doesn't make sense. So when I am able to look at it and I can look at a year to year, what did I spend on, let's say Zoom? I paid this much for Zoom. Can I get rid of Zoom? No, maybe not. But can I get rid of something else that I'm not using that, I may use once a year? Absolutely. And then the other thing that I do is I do this all the time. I do it at least one all the time. I say at least 3 times a year. I go back and I go and I try to negotiate, like with Comcast. I have Comcast Business because I have an office. I go back and negotiate, am I paying what I should be paying for the Wi-Fi or the package that I have? So sometimes you just gotta go back and be an advocate for yourself to see if you're paying for what you really need.
But what about Sheila? What does Sheila want in her profit in her business? What makes Sheila happy? Is it, when you're looking at just your lifestyle, your bills, future retirement, what is profitable for Sheila?
Well, such a good question. I have I have a standard of living that I will not compromise. And I pray all the time that, and I thank God all the time that He's blessed me to be able to maintain this. So for me, when I'm looking at my P&L, I'm looking at my business and I'm looking at the money that's going in and going out, I'm making sure that I'm also paying myself. So from every company that I have, not only do I pay myself a W-2, but I make sure that I'm able to have a lifestyle that allows me to be a blessing to others, allows me to be a blessing to myself. And then I've also poured into my future. So outside the business, I'm like, well, okay, if the business is making this, how can I invest some money that's going to pay me later? If that means going out and buying a property that I can make money on. I bought one in 2024. I may have mentioned it to you, but I bought this property out of state in 24. And I thought, okay, I'm just going to flip it. And then I saw an opportunity where this could, I could use it for short-term rental or longer term, like furnished finders. And even doing that has allowed me it took like this level of stress off of me because it's allowing me to now pour to not just myself, but also into my future because I have to have an exit strategy. I'm not going to be doing real estate forever. So when I'm running my business, I'm also I'm doing a couple things. I'm setting it up so that I can retire one day, but I'm also running it so that I could pay myself one day. And what I mean by that is I want to be able to sell this business. I want to have a portfolio where someone comes in and I show them my business financial statements and everything, and I can sell that business for a profit so that I can have a better life in my future.
Great, great. Thank you for sharing that with us. And I'm glad you mentioned there is a certain way that you want to live because as, things change, pricing changes in the industry, how we're paid changes in the industry. It's very important that we maintain our value, right, as business owners and CEOs of our business and what we offer to our consumers. So, what advice would you give to women business owners who fear losing clients when they raise their prices?
That's man, that's a tough one. I used to be scared of losing clients all the time. And so, like on the mortgage side, I would give up some of my commission to help my clients get across the finish line. Yeah, but at the end, it didn't feel good because this is what I'm doing to make a living. And so, just like setting standards and how you operate your business, you got to set a standard and know your word. So I'm not scared about losing clients anymore. I know that I have to deliver. I have to provide a certain level of customer service. And as long as you're doing everything that you're supposed to, those customers and those clients that are supposed to be there will be there. Not everybody is your customer. Not everybody's going to be your client. You're not going to win them all, but you have to focus on the ones that are there. Now, again, I just don't have that fear because I know that for every client that chooses not to work with me, there are going to be three or four more that choose to work with me.
Right.
So I'm going to pour to those ones that choose to work with me. And I'm not doing it at a discount. I'm not discounting my value for the client. But what I will do is I will make sure that I will work so hard that on the mortgage side, I'm going to save them as much money as possible. I go above and beyond. If they need help with wording on their letter of explanation, I'm going to give them advice based on the information that they provided me. So it's you just deliver with customer service. Don't worry about those clients who want to leave. Don't
Mhm.
get me wrong. Now I'm a client for my clients. I don't like to lose, but to me, I don't see it as losing. I want to keep the ones, that want to be there and want to work with me.
And one thing that I talk about too with agents in my company too is value proposition. So really breaking down what is it that you offer, right? And so if we're raising, let's say, our pricing on our being a listing agent, what are the services that we provide? What is the cost that may be associated with those services as it pertains to the market? And then really analyzing, are we going above and beyond to hold true to our value? And so I think not only the fear of losing clients, you also have to be transparent and honest with yourself about what services you're offering and make sure that it is an excellent. I'm so for customer experiences because that really, really holds the value when it comes to where you are with who you are and how much you're charging for your services as well.
And I'm going to add, it's also too, it's like that customer experience. So instead of like focusing on customer service, I started to change my model and focus more on their experience. And I've had bad experiences in my past, and I always remember the things that I wish when I bought my first home, I wish my agent would have mentioned this, or I wish my loan officer would have told me that. So those things, I try to be proactive and making sure that I don't lose sight of the things that didn't work for me when someone else was representing me. And I want to be that person to my clients. So when you're doing running a business, you always have to think about customer service. And those are the things, customer experience. Those are the things that keep people coming back. They refer more people to you because they're gonna always remember that experience. And in doing so, just don't lose sight of your value or what you're really worth.
Definitely, definitely. And so, in holding multiple and owning multiple businesses and wearing multiple hats, it is a phenomenal experience. It's great to be a woman in power and in control of your destiny, right? But it also comes with some stress. So, of course, our income is not consistent. It goes up and down, it's cyclical. We don't determine the market. So, we find ourselves hustling even harder and putting even more pressure on production when times get slow so that we are still meeting our goals and staying profitable. which made me think of one other question. Do you ever share your profitability with your team? Is that something that you share like, "Hey, we're profitable," or, "Hey, guys, we're on a downslope." Like, are you strategizing your meetings based on where you are to where you would share, like, "Numbers are down, this is how we're gonna operate because of it."
Absolutely. I've shared with my team because I've had to cut back. There are times when, like during COVID, my numbers were, you know, off the charts. And when the rates started to go up, it was impacting my real estate business and my mortgage loan business. And I sat down with the team, I met with them, but by doing that P&L all the time, I also see I also see patterns
Mhm.
and I do forecasting. So by seeing the forecasting, I start to see like, okay, those sales numbers aren't as high as they used to be. They're not one or 200,000 in a month. Now they're 20,000 in a month. Oh, that last month was slower, but you have to be able to forecast and keep an eye on just the fluctuation of your income. So I didn't have those conversations. And then like even on the logistics side, I have people who are W-2. They're looking at the cost of living and inflation. They want a raise every year.
Mhm.
And I had to have a conversation. I do annual reviews with on every level, whether it's the real estate assistants, where there's the mortgage people, they're helping me, my logistics employees. I do annual reviews so I can say this is where you are today versus where you are last year. Mid-year, I meet with them as well. And I say, this is what I see is happening before your annual review. These are the things that I want you to improve on, or these are the things that you're doing well. And then that way we don't go through a whole year and things are getting worse. So because I'm doing that, I'm also communicating with them what's happening with the company financially. I am very careful not to share exact numbers.
Right.
And the reason being is I'm not a public entity, right? You can't buy stock in my company. But the thing about it is most people don't understand that a good month may not be a good month in March. It may not be the same month in April or May. And so they will remember only what you tell them and they're not going to see the bad months and, the worst months. So I have to be careful with divulging exactly how much.
So before I ask you this next question, I was going to ask you, how do you manage financial stress? But I have to ask you first because you may not have stress. Do you have financial stress during slower business season?
Yeah.
Okay. And okay, so I don't want to assume anything. So I ask beforehand. I don't want to just, assume. But how do you personally manage financial stress during slower business seasons?
Start to strategize. As a matter of fact, I was like it becomes consuming. Like I may be able to call, I may even be in a meeting with like the board or whatever. But mentally, I'm thinking, okay, what do I need to do? What do I need to change? How do I grow my business? And I start strategizing in my head because in order for me to get rid of the stress, I have to have a solution. And so that's that's just the
We're
way
gonna
I
we're gonna keep that one, like the youngsters say, clock it, solution. We have to be solution based.
you have to be solution based. So I'm not going to sit there and stress without thinking of how do I resolve this. So when things start to slow down, I mean, when things start to, the logistics company, I knew amount of money we were making on the mortgage side during COVID wasn't going to last. So I'm like, how do I offset it? If I, if I wasn't thinking like that, I wouldn't have taken advantage of the opportunity.
Mhm. Right.
But I have some other things that I got cooking right now. Like I'm ready for it. I'm ready. Like I have some things cooking because I couldn't sleep for the I'd say last couple of weeks. It's just really consuming me on, okay, what am I going to do? But also what I've been doing is I've been working with so many different people. I'm starting to identify some people based on their strengths who may be a part of that team and a part of that next venture with me.
Nice, nice. So always thinking of the next. And that's the entrepreneur spirit in all of us. I've been working on a couple of things myself, some that are just like, I just woke up out of my sleep and was like, this will be great. But that's that entrepreneur spirit in us where we know if we put the right strategy together, it's going to work. It'll be successful. And it's the creative. And so it's such a joy to be an entrepreneur and have that power, especially when you already have a business and knowing that you have the tools and the resources to then execute your dreams, right? Without barriers because you're in control. Right. I want to close out with a couple of questions. So what does financial freedom and long-term wealth building look like for you as a business owner? So we talked about, we briefly touched on you saying exit plan, and I think that is so important. I was recently in a conference. I'm not sure if you were in the session with me where I asked a panel what their exit plan was, and they were very successful in real estate, and none of them had a solid plan. I just think we all think we're just going to hustle until the wheels fall off. I have no idea, but it was almost like triggering when we asked that question. It's like, what is your exit plan? So, what does financial freedom look like for Sheila?
You know what? I was talking to some ladies just recently, some business women, and they were saying, "Oh yeah, I just want to be debt free." Financial freedom to me does not necessarily mean debt free, because sometimes you need some of that debt and those expenses in order to have write offs. Because I'm thinking of like, I need write offs too. But financial freedom for me would be really making sure that I'm profitable. And then again, that my business is set up that it's almost like having a house, right? So you take care of your house so that if you ever decide that you want to get rid of it, you can sell it for a profit. Mine is maintaining the businesses that I have so that I can position those to be sold so that I can use that towards my future. I'm not worried about being debt free because sometimes having with more capital is more important than just paying off all your bills every month. Sometimes you may have experienced this. There have been times when I've had a great month and I'm like, I'm paying all my bills off. And then the next month it's not so great. I'm like, why, babe? Did I pay those bills off? I've actually got more money in the bank. I'm over it. And then I want the money back. And so now guess what? I got to go use that credit card because I paid off my American Express when I could have made a monthly payment. But it just means to know that I can maintain my standard of living, even with the expenses that I have. I don't want it to get crazy. I just want to be able to have a standard of life that I'm accustomed to and to be able to leave generational wealth. So, I want to keep investing. I want to be able to position myself and my accounts and my properties so that if something happens to me, that I'm leaving to my family so that they can continue to do what they're doing.
Right. I so agree because a lot of times I tell people, "Oh, I want to retire by this date." And a lot of people, especially if you're not entrepreneurs, really can't understand the what I'm saying. It's like, "You're too young to retire. Like, what are you talking about?" But now I term it, I don't say retirement to people. I say I want financial freedom by XYZ date. And financial freedom really is knowing that you've invested properly and you have the cash flow necessary to maintain your lifestyle without you hustling, getting up every day and working the field that you're in. If it's a real estate broker, like financial freedom to me means that if the business is so profitable that I have somebody managing the brokerage and I don't even have to check in on where my agents are with their deals and how they're operating. So I think it's very important that we start visualizing financial freedom and what it looks like for us. And I agree with what you said about that. Because in financial freedom, I may have investments on properties that have mortgages on them. But then even though they have mortgages on them, which is a debt, they make cash flow to a point that still provides me the opportunity to have financial freedom in my daily life. And so um thank you for sharing that because yes, that I have had that month where it's just like, oh, yeah, let me go pay this off. I'm okay. One of my kids wanted this. Let me go ahead and knock that out, And then you turn around and you have that slow month and then you're kind of balancing and then your kids are looking at you like, where's that flow at? Where is that? And I'm like, things aren't the same this month, y'all. No one asking me for extra stuff. So that's a great point, and thank you for sharing that. So, what I would say, if you could go back and tell your earlier business owner self, one financial or business strategy tip, what would it be?
Does the owner make a decision based on, or take the emotions out of it? Take the emotions. I've made mistakes in the past. I've had businesses and business partners that I kept way too long. I held on when I knew it wasn't right. You got to make a decision and be true to yourself, because if it's not working, don't let it keep bleeding out money. So if you gotta pivot, pivot. If you gotta cut ties, cut ties. But sometimes we hold on too long, and it's damaging not only financially, but it could be damaging mentally to your self-esteem. Like, you got to know when to let go and move on. Don't worry about what anybody thinks. You're not failing. That's why these large corporations, you, You see like all these companies that used to be in existence that are no longer in existence because they made a decision. They made a business decision to close the business. And some of them, I think I'm like, man, like Mervyn's. Mervyn's used to be here. And now then you got Cole. Like Cole is nothing but Mervyn's with a different logo on it. And like you can just kind of readjust. But for me, you gotta know, like, don't wait until you drown to make a decision. When you start to gasp for air and you're starting to say, okay, this isn't right, this water is coming up, it's getting too high, make a decision. Make it for business reasons.
Right, right. I think that's great advice for anybody that is a budding entrepreneur too, that's looking to jump into self-employment and running their business. That is so, so true. And I have those conversations with myself all the time. So I would like to thank you so much, Sheila, for joining us in our Professional Women in Business Real Estate series, our CEO Growth series. You are definitely a boss CEO. So we wish you all the best in your future endeavors. I can't wait to hear about. We may have to bring you back on later in the year and see what's in your pipeline and what you got going on next. So thank you so much for joining Women's Council of the National Association of Real Estate Brokers for this segment. We truly, truly appreciate you. And thank you for the listeners that have subscribed and are tuning in. Don't forget to like, share, and subscribe if you haven't already. Thank you.